Okay, sir. So shall we start now?
Yeah, I'm ready.
Okay. Namaste, sir. Namaste, everyone. I'm Mehek from All India Institute of Valuers Foundation. And on behalf of AIIOVF, I'd like to welcome all the participants and our speaker for the day, CA Hemantha Kumar CN. So before we start with the webinar, I'd like to give him a short introduction. If you may allow it, sir. May I start?
Yep.
Okay, so Hemantha, sir, he's a practicing chartered accountant and an insolvency professional. He's a promoter and founder of Mrs. Hemantha and Company, which is a chartered accountants firm in Chennai, a certified forensic auditor and a certified concurrent auditor for banks from ICAI. He's also a registered valuer into the category SFA, Securities of Financial Assets. He's a co-opted member at the SIRC Regional Council, Students Committee for SIRC, and he's a regular speaker on many professional topics at many CPE circles and ICAI branches. And today we are pleased to have you on this platform of AIIOVF for today's topic, which is how to prepare valuation report. On to you, sir.
Thank you. Thank you very much, madam, for a nice words and nice introduction. Very good afternoon, ladies and gentlemen, and my professional colleagues. So welcome to you all on behalf of All India Institute of Valuers Foundation. Outset, let me register my thanks and gratitude for the organizers, especially my good friend, Chartered Accountant, CA Vijay Kumar Gupta ji, Managing Director for the organization, and Madam, very actively participating and organizing the program very nicely and very professionally. Thank you very much for inviting me to share my thoughts on how to prepare valuation reports. Friends, how to prepare valuation reports is not a new topic for us. And day in, day out, we are in our professional life. We presently maybe 20 members plus, and maybe another few members may be joining shortly. So valuation report is not a new topic. Every day we are doing that in our day-to-day life. After completing the professional work, we are issuing the valuation reports to our clients, depend upon the requirement, depend upon the style. But one thing is very common, that out of 20 members where we are gathering, 20 plus members where we are gathering, if for a particular section, particular provision, let us say Companies Act, particular section we are giving it. But one thing is common is all 20 reports will be entirely different. Different people will give a different way of presentation. Myself will give a different presentation, and different people's over a period of experience, we have a standard practice systems, and we will giving the reports. But despite that, why we want to very much, we all of us, including me, we are very much interested to know about is there any new points we'll get while participating in the programs like these continuous education programs, new points in the preparation of the valuation reports. It's like, like bride, until marriage reception starts, the makeup for the bride keep on going. So a makeup man will always be doing something, and a bride also having the makeup until the reception starts. Even reception start also, we'll give the touchings. The same way, even our valuation reports also, until we hand over our report to our customers, we'll keep on tinkering this, that, and we want to do some adjustments into that report, and make ensure that report is in tic-tac. There should not be any problem, and it should be look nice, and it is the identity of valuer in the market, the stakeholders of this particular valuation profession, not only your particular client, but also legislators, as well as if the report is required for any particular registration purpose, or in the case of adjudicating authority or any other review purpose. So absolutely, our valuation reports is the index for our valuation quality of services. All of us knows about this. Such a valuation report, how to prepare and how to take it up. Before understanding further more, and let us introspect ourselves. What is the present valuation profession status in India? The recognition of the valuers in India. So let us take a few minutes to understand about what exactly it is. Valuation profession is not a new profession. Post-independence, 70 years plus, the valuation profession is handled by different professionals in different platforms in different ways. One second. Sorry. In the case of engineers, especially land and building, plant and machinery, so through some particular forums like IOB, IAF, the different organizations in India, different people organizing themselves where the values and valuation profession was extending and supporting to the society through the bankers, to the clients, and different stakeholders in the society. And in the case of chartered accountants for the company related issues and other related issues, chartered accountant, company secretary, and cost accountants, we are also providing the services to the society, to our clients in different forums, different provisions in the valuation related works. So there is no one adjudicating authority, like chartered accountants, there is an adjudicating authority controlled by a chartered accountant institute. Chartered accountant anywhere in the law, in the legislation in India, accountant means Chartered Accountant Act 1949. So there is a significant identity and institutional framework and control by adjudicating authority. The same system is not there in the valuation profession. As a result, first time in India, even though in 2013 Companies Act came, and 18th October 2017, section called 247, single section, single chapter, notified that related to and recognized the valuation profession as very nomenclature, very decent way, as registered valuer. On the same way, 247 having 4 subsections, and along with the section, there is a rules also issued, company register valuer and valuation rules 2017. And with a span of 5 days, there should be a requirement to having adjudicating authority. And 23rd October 2017, adjudicating authority, the time government thought that time being, let us take IBBA, Insolvency Bankruptcy Board of India. All of us knows about this. Taken the charge into that. So in other words, the first time in the valuation profession legally, we have more than 15, 16, 20 legislations required the services of the register valuers in different legislations, different provisions, different ways, and using the services of the registered valuers in the society, in the business economy, and building the nation. We are providing the services, extending the services, whatever nomenclature we call, like SPRU valuer, certified approved valuer, registered valuer, wealth tax, registered valuer, now presently Companies Act, and we call as an appraiser, we call as a sometime IRD surveyor. So all these things, the professional ways and different legislations, different ways, people will be calling as Dasavatar by the Mahavishnu. Whoever calls whatever way, but Mahavishnu will say and give the blessings and accept and doing that one work. And the same way, valuer also, whatever name in the different legislations will call, we are accepting and we are doing our profession. And it's related to this, all these things, as you know very well, today scenario, the register valuers in put together, all 3 professions put together itself, not even 4,200, it is a 4,142 odd. Countdown starts and still going on. Still baby, still not enough people to entertain the services of the register valuer profession, not only Companies Act in the different legislations, including the banking related services. And in the case of RVEs, we have 43 RVEs. This is only to understand where exactly numbers of the register valuers profession in India to have. Still, a lot of potentials are there for the valuers, and the number should be still further to be increased to cope up the requirement of the valuer. On the other hand, there are few valuers may having a question saying that before taking up further into this, the disclaimer for my entire discussion. Already organizers have informed me that the present crowd of who are participating 24 plus now presently, all are different, all 3 category of assets. So my discussion will be keeping the mind that all 3 classes of assets, despite I may register valuer and security financial asset. So I'll keep my discussion commonly as a valuer and keeping all 3 classes of assets in the mind. Fair enough. So as discussed, the recognition of the register valuer, and before knowing these, we recognized by the Companies Act section 247, and in 247 specified about who is the register valuer, who is the appointing authority. So if you want to do the valuation related works, and if you want to do the valuation report, first work is you have to be appointed by the client earlier, you know that appointment will be done by your CFO or known source in the company. But after Companies Act 247 introduced, if you are doing evaluation works as per the compliance of the mandatory clauses under Companies Act, so your appointment will be done by only the board of directors or audit committee if they are having it. I repeat, in the case of Companies Act, mandatory provision, we already know this, but still I want to ensure that, especially those who are doing land and building and plant and machinery, if they could not able to follow, kindly ensure your appointment letters should be done by, appointment should be done by audit committee, if a company having an audit committee, because few companies only require the requirement of the having an audit committee and compliance, and big companies, in sort of big companies required audit committees, then your appointment should be done by audit committee. And if a company not having audit committee, it should be done by board of directors, not by your friend or CFO or CEO or manager or any other general manager, GM, senior manager. These people are not eligible to appoint as a valuer under Companies Act. And who is what are the assets going to be do the valuation? You know that. And who is registered valuer? Registered valuer is a person who is having a qualification, experience, and registered as a valuer with the adjudicating authority is called registered valuer. And Companies Act made it very clearly in subsection 2, class, how to do the valuation. So what is this question? How to do the valuation? Valuation has to do as per the valuation, what required. But is there any provision in the law? Yes, there is a provision in the law how to do the valuation. Then our Companies Act not given choice to do a valuation as we wish. 247 subsection 2 C says that make valuation in accordance with such rules as may be prescribed. Fantastic. Law made it very clear. If you want to do valuation, you should not do your valuation based on your experience or some other whatever way you wish. Valuation is you have to do your valuation. If you are where the court as a registered valuer, you have to do the valuation as per as the valuation rules. So what is valuation rules? Talking about the valuation and valuation report, we'll study a little bit later. Now, one point is very clear. So once you appointed as a valuer under a mandatory clause as a registered valuer under Companies Act, we have to do valuation as per the valuation rules. Appointment should be properly done. And 2, valuation should be done in accordance with the valuation rules. Of course, what to do, what not to do by the valuer, clearly given in the 247 subsection 2. All of us knows. And there is an amendment in the company law. Earlier, if you are contravention to the provisions of these particular sections or rules, and valuer shall be liable for minimum penalty. Earlier, what is the amount? Anyone? If you want to chart, you can put in the chat box. What is the penalty earlier? So let us have an interactive session. So what is the penalty earlier?
Sorry to interrupt, sir. If you allow, can I just allow everyone to talk so that it becomes more interactive?
I have no problem.
Okay, so I'll do this.
No problem. But let them keep in mute. Whoever want to speak, let them speak. Yes, you are right. So it was a range of 25,000 to 1 lakh rupee. Any amount can be happen. But law was amended in the March 2021. It is amended. And now liability initially, if you are meticulously doing any clerical error or oversight, any mistake happen, it is a 50,000 rupees flat. And if you are doing a valuation and intentionally defraud the creditors, the penalty will be 1 year to the extent of 1 year, and 1 lakh rupee, 5 lakh rupee. Apart from that, you have to refund your remuneration and pay the damages which fixed by the certain adjudicating court. So this is the 4 provisions are very important. I thought let us have a recap before understanding the valuation report, all this stuff. I think we had to. Hello. I request again. I think this is the disturbance. We'll mute all, madam. Better we'll take a question answers last. Mute all.
Noted, sir. Noted.
Okay. Because again, if you allow, it will be happening in a different environment. Okay, it's a part of the game. Now we understood what section 247. Now, as I told you, first time valuation profession was recognized by Companies Act. IBBA come out very nicely with the circular on 16 September 2019. There are 13 legislations, 13 provisions, 13 sections, circumstances where mandatorily, whenever the transactions are happening, valuation has to be undertaken, and valuation should be done by only a qualified registered valuer, none other than. At the same time, the second legislation in India who recognized the valuation registered valuer profession is IBC code, Insolvency and Bankruptcy Code. And from 31st January 2019 onwards, it became mandatory. Only registered valuer transaction provision is over. And at the same time, the same more or less 1st February onwards, 2019, whenever these 7 circumstances, valuations are taking place, most of the people are in the allied crowd already taken valuation works in the Companies Act most of the time, or it may be you may be taken the cases of CARP or liquidation related cases. And apart from these 7, the new professional opportunity under IBC, all of us knows, from April 1st week is a new provision was introduced, that is on PPIRP for the MSME sector, micro, small, medium enterprises sector. So keeping 1 crore as a limit and 10 lakh rupee as a basic default, and new professional opportunity apart from 7, 8th category was introduced and given the opportunity under pre-pack insolvency resolution process. Apart from CARP, regular CARP process, apart from that 7, one more category of the professional opportunity, PPIRP also included. These are the mandatory. Only a qualified registered valuer within a span of 3 days, they had to appoint the valuers under PPIRP, whereas in the case of CARP, 7 days to 47 days. So in other words, apart from 13 mandatory clauses, I repeat, apart from 13 mandatory clauses, 7 plus 1, 21 mandatory clauses, all these clauses, all these provisions, only a qualified register valuer can also do the valuation work. And of late, SEBI also recognized the professional qualification of register valuer, and there are 4 instances, 4 provisions which required mandatorily the requirement of a register valuer. So presently, in cut short, 13 clauses in the Companies Act, 7 plus 1, 8 clauses in the IBC, put together 21 plus 4, 25 instances where mandatorily required a call is a mandatory required clauses which required by the legislations, concerned legislations, only to be done by concern register valuers and register under IBC and IBBA. So what about the fate of the other legislations where presently other legislations, every legislation have the qualification and entry and recognition and reporting what is exactly they want the content of the valuation, output of the valuation. In the concept, for example, Income Tax Act 11 UA for share valuation, and recently income tax new legislation also started for valuing the slum sale, which I'm going to take down the line 2-3 days, but 22nd of the same month. So this is also one more professional opportunity in Income Tax Act by issuing a rule called 11 UAE, slum sale. How to do the valuation of the slum sale? Earlier, slum sale valuation methodology is not there. Only provisions under 50B is there. Read with the section of slum sale definition. Now they introduced a new rule like 11 UA. They introduced one more rule called 11 UAE, which is applicable for all 3 classes of assets. This professional opportunity is not only restricted for only for SFA, it is for the land and building, plant and machinery, and for SFA. All 3 classes of assets have the professional opportunity. How to do the valuation for the slum sales whenever sales are happening in a MRP basis and a single consolidation basis, how to do the valuation and valuation formality altogether. And in here we discussed that one off late. And how to conduct the valuation? We understood that valuation has to be done as per the valuation rules. What exactly the particular section, how to do the valuation in the valuation rules, let us understand. Under valuation rule 8, subrule number 1, the registered valuer shall, while conducting the valuation of a company with the valuation standards as notified and modified under rule number 18, provided that until valuation standards are notified and modified by the central government, a valuer shall make valuation as per. That means you have to do your valuation related works as per as the valuation standard notified and modified by rule number 18. What is rule number 18 and 19? As per as rule number 19, a committee was formed. A committee was formed by the central government, and a set of people are representative from RVOs, RVs, central government, and IBBI, and like different legislative peoples are already members in that particular thing, and they already formed, and meetings are already taken place, and representations are taking place. What is the future valuation standards in India, which is already taking place? And it is under like a GST, how monthly we have a committee of GST committee meeting, the same for all by the ministries of all the states. The same way, these meetings are keep on conducting on periodical way, and it is almost all reached one conclusion stage with our limited source and information. And uh, so present situation for the valuation committee is they want bringing to the Indian valuation standards, valuation atmosphere, business things. They're keeping in mind, they're developing the valuation standards. Until the valuation standards, what's the fate of the valuer? And thanks to law, it says that A, as per as the internationally accepted valuation standards. B, valuation standard adopted by registered valuer organization. My God, this is a very big confusion. A and B, there is no or and. Either had to follow international valuation standards or valuation stand, both had to follow. The question will arise whether I had to follow both IBS as well as international valuation standards as well as valuation standard adopted by the RBO. So thanks to draft valuer bill, to clear that confusion, they're given as very clearly international valuation standards or valuation standard adopted by the concerned RVO. Most of the RVOs adopted presently IVS, International Valuation Standard Council, or whatever standards they issued, that valuation standards taken as a valuation standard for doing your valuation related works. Fantastic. Now we understood, if you want to do valuation works in India, the present scenario, valuation profession is recognized by the Companies Act, and Companies Act, IBC code, and SEBI few sections are recognized the valuation related profession. Other related sections, other related acts still yet to be recognized. That is on the flow. Number two, if you want to do the valuation under the Companies Act, under mandatory, we have to do the valuation as per the valuation rules. Valuation rules that you want to do the valuation should be done by, how do the report? Report can be given if you do the valuation. So valuation report can be generated only if you do the valuation, how you are doing the valuation. So that is the reason I'm taking this much time to ensure that if you want to give the output of the valuation report, input is important. In computer also, the quality of the output will be depend upon what exactly you give in the input. What input will give, that is going to be having our probably the things. In the computer also, whatever input you give to the system, what are the information you give to the system will be calculating it, and based on your requirement, output will come. If your input is very bad and information is wrong, information is not correct, and if data for the processing, if you are not giving a correct one, and automatically your expected output will be wrong, not up to the mark of the requirement. So absolutely, if your input, the next step for the output of valuation report is valuation, the working of valuation works. So you're doing valuation works, you have to do the valuation as far as the valuation standards. Fantastic. So let us understand that. And before going to the next topic, let us take me a few minutes. What is the fate of the, now we understood valuation has to be depend, and then under value as per the Valuation Act. And of course, in the Companies Act, they're given very clearly what are the things to be mentioned in the valuation report. So these are there is no prescribed format. Now I'll come to the topic. There is no prescribed format in any act except few legislations. We're having the few sort of templates for the valuation reports. And the Companies Act, there is no prescribed format. But under Rule 8.3, it made it the mandatory 1 dozen columns, like background of the information of asset being valued, purpose of valuation, identity of the valuers, and disclosure of the valuer interest and conflicts, date of appointment, valuation date, date of report, inspection date, nature and source of information, procedures adopted, restrictions, major factors, conclusion, caveats, limitation, and disclaimers, to the extent they excluded, and to explain and excluded the limitation faced by the valuer, etc., etc. These are the mandatory requirements that your report should consist of. These are the contents. And so this is what we understood. And let us understand before further detail about this thing. What is the fate of the valuation profession down the line few days? As friends, as you know very well, the valuation profession draft valuer bill was introduced in the exactly one year back in April. And the draft valuer bill, there is a definition called section 2 subsection 52. Valuation services means services relating to valuation of assets or liability, A, which is required on the provisions of Banking Regulation Act, Security Contract Act, Wealth Tax, Income Tax, SEBI, IRDA, FEMA, Security Contract Act, and the Prevention of Money Act, Limited Liability Partnership Act, Companies Act, Pension Fund Regulatory Act, and Black Money Act, Insolvency, Bankruptcy Code, any other law. So we can foresee of the valuation profession in future, this valuer, draft valuer bill, we already given our suggestion to the thing, and presently it is in the court of the parliament. Anytime it can be taken to shape, either coming month July session or it may be December session. Anytime it can be transformed into the draft valuer bill after getting the both parliaments acceptance and with the nod of the president. And once it became draft valuer bill, will come under the adjudicating authority called one institutional framework. What we foreseen in the day in the starting of our session, that NIV, National Institute of Valuer, one organization going to be organized, and IBBL handing over equivalent of that. IBBL handing over the responsibility to the NIV. Once it is started, the moment the act was passed, all these legislations will going to come in a single shot to us. The existing register valuers will be transformed and going to be a valuers, and we are eligible to use as a associate valuers, those having complete up to the year of experience of 5 years, and those are completed 5 years of experience, we can have a prefix of fellow valuers, and those who are not in the practice and who are doing contributing to the profession of the valuation, we can be honorarium valuers. So in other words, all these 15 legislation, 14 plus 1 other common natural one, and which is any law which is the future going to come. So these all 14 legislations in single shot, we are going to have the signing authority. So now the question can be raised and touch our hearts and ask, are we as a register valuer ready for understanding all these legislations or not? Because before venturing into any legislation and before venturing and signing, putting your signature in your valuation report in the concerned act, let us understand the depth of the particular legislation and requirement of the particular legislation, and what is exactly the expectation for the valuer and what concern provisions related to the particular act we have to understand. So my request by this forum to the all members who are attending the particular seminar, I request, let us before this particular valuer comes, before attesting our scope expanding from presently we have a boundaries of 2-3 registration, and no doubt none of us in our crowd will be completely doing 40-50 legislations. So let us understand each legislation, what is the requirement of the valuer presently. For example, wealth tax means we have to go for registered with the wealth tax department, income tax department, commissionerate, and 34 AB of wealth tax act certificate has to be obtained. And if you want to do IRDA, you have to register with the IRDA training has to be undergone, and license have to be obtained. Like this, different legislations require the requirement of different things, and by spending different cost involved, more than that, time and cost involved for getting the licenses. All these licenses we are going to get in a single shot by putting the legislation of valuer bill taken to place. So once this valuer going to be the valuer bill, this until that what present system we are going to study. If tomorrow this valuer bill comes, what law says about, we'll have a very quick 2 lines. A valuer shall conduct valuation, render valuation services, and prepare the valuation report in such form and manner as may be prescribed. Probably the present, what we discussed a few minutes back, the law of rule A3 will go off, valuation rules will go off, separate rules will come. As a token of that, one step further approach of that, then particular taken up action of this particular thing. That is the reason IBBI, our adjudicating authority, on 1st September 2020, they come out with a guidelines note on caveat limitation disclaimer. We'll discuss a little bit later on that. So like this one notification, our guidelines are some, for example, this particular area, so specifically rules may become, and what are the contents will be the valuation report, and the importance of valuation report further going to be much more. A valuation report shall not carry out a disclaimer condition which has potential to dilute the responsibility of the valuer under this act, or makes valuation unsuitable for the purpose of the valuation was conducted. The same exact language was used in the caveat limitation disclaimer guidelines note also. And valuation report shall be admissible as an expert evidence within the meaning of section 45 of the Evidence Act. So our valuation reports going to be having a significant importance in the economy, in the even the court of law. Whenever things are has to be, it can be treated as a on sort of evidence for whenever a disputes related to particular transaction. So that much level of importance, even today also it's a sort of thing. But this type of language is not there in the law. But tomorrow they made it in the law itself. Our valuation report, it's going to be a one sort of admissible expert evidence within the means, can be used as evidence within the meaning of section Indian Evidence Act. So keeping that in the importance, we understood that until the valuation, this particular things comes, particular law comes, and even they're talking about the particular point which I'm talking about, until even the draft valuer bill comes also, became Valuer Act. It says that internationally accepted valuation standards and guidelines are valuation standard guidelines adopted by the concerned valuers. So they're given very clearly whether until the present valuation standard committee, by identifying and clarifying and come out with that recommendation, and with the central government notification, until that valuation standards are taking place. And presently we have to follow the valuation standards. So now we understood for writing the valuation reports and for doing evaluation related works, we have to follow, in other words, we have to follow valuation standards. Most of the except ICAI RVO, out of 16 RVOs, except ICAI RVO, my understanding, my knowledge, subject to correction, remaining almost all RVOs adopted international valuation standards as IVS. There are a number of international valuation standards. Out of that, IVS is one of the significantly widely used valuation standards, all of us, which you already know. So to understand better way, IVS presently we have around two sets of standards, like general standards to assets-based standards. There are five general standards. There are 7, including non-financial liabilities, recently last year included. Including that, there are 7 put together, 12 valuation standards presently exist. Friends, let us understand the importance of the valuation standards. If you want to do the valuation reports and you want to do the valuation related works, no doubt, even ICA valuation standards also, more or less, it's the parallels with the international valuation standards, except very few areas, wherever ambiguity is there. Apart from that, invariably, either ICA valuation standards, and it's mandatory for ICA members and ICA RVO members who are following. They're since the ICA RVO adopted valuation standards of ICAI, so ICAI RVO members mandatorily should follow ICAI standards as a standard until these valuation standards are notified. So all valuation related works they have to undergo. Okay, ICAI is only related to restricted with the security and financial asset, so we need not much discuss on that. In this allied crowd, we have all 3 classes of assets. Friends, so we decided we have no choice. We had to do the valuation works only as per as internationally accepted valuation standards, which is recognized IBS as the internationally accepted valuation standards. There are 5 standards. In that, I will say we are going to handle standard 103, reporting. Before more than reporting, I will say the most and very important standard I feel, and head of the standards is the first standard. First impression is always the best impression. Prevention is better than cure. Whatever the way you call, the first and foremost standard is scope of work. Friends, if you, as I told you, if you could able to understand the scope of work properly, and if you could able to properly document it and spend very decent time, especially whenever scope of work, our senior even when a firm is having one partner, one individual valuation professional, and we interact with the client. In case if a profession is having a little bit having a bigger one, you may having a 10, 15, 20 staffs and one or two supporting professions along with our valuers. And in those offices also, I strongly recommend those people are having the signing authority. Definitely, those people should work on the one-on-one and discussing with the client and understanding the client. You only going to guide your entire team. You only going to guide the entire team. So unless otherwise you understand the scope of work properly, and the moment you received any call from your client for valuation related work, first question, when you are getting the valuation report, generally client will ask, when I will get the valuation report, sir. Sir, without understanding what exactly the report, what exactly the purpose, and what exactly the scope, and what is the risk and rewards, your rewards always be, your rewards, remuneration always be linked with your risk. And how much you are going to have the risk means, matlab, not only risk in the taking the particular assignment, and also the work involved, the time involved, and the not only you and entire your time, how much you are spending for completing the particular task is very, very important. Depend upon, you have to fix your remuneration also. So if you have a very good, I will repeat, if you have a very good, a valuer must communicate the scope of work to its client prior to completion of the assignment, including the following. Even the day one, if you could not able to get the exact scope of the work, and orally if you agreed, and as per as the Companies Act also, it is mandatory that you should get the appointment letter. So even one-on-one made it very clear before completion of the assignment. Even though one-on-one says, it is strongly advisable. It is strongly advisable to have your valuation, assignment, and appointment letter. Either let them give appointment letter in a formal way, and in turn you can also have either he giving the appointment letter or not. But formally, you can have your own standard procedure of your mandatory things which specified in the one-on-one, because you are doing valuation works as per the valuation standard. As per the valuation standard, one-on-one is mandatory. In the one-on-one, these are the contents which required to be mentioned in your valuation report. Not only that, it is very, very important, friends, because I'll tell you what is the importance of each and every clause in the over period of from practically we can understand. Identity of the valuers, who is the identity for the valuers, and it is very important that who is the going to we has to identify ourselves. We valuers as a value under SFA and IBBI registered so and so number, and who is going to do the particular assignment, and what is the people who are involved in the team is very important to identify the valuers, identify clients. So few cases, what will happen? Sometimes the holding company, if you want to do the valuation of subsidiary company, or if you want to do purchase of some other company, they can, on the request of the particular consent of the company, they can appoint you. That means on their own company you can do the valuation, and valuation can also be appointed for some other company where you are going to do the investment, and with the support of that. So the client name is very, very important for which client you are doing the valuation related work. You have to make it very clearly in the initial. This particular point is very important because whenever you're doing IBC related cases, let us take example of IBC related cases. Whenever you are doing IBC related cases, you have to be very careful before giving a quote, because when you do an valuation, in your valuation, if the shares, investments under investment, shares are there. If it is a listed company, you can easily identify and you can arrive some values. In case of unlisted company, again you have to identify the company and getting the numbers and financial statement, and that particular company again having one more chain of subsidiaries. Until that, finding out the exact value on the particular investment, we have to have it. So unless otherwise understand the complete chain of the organization structure and the scope of the units and clients which are you are doing it, and it's very difficult to give a quote. And if you give a quote, once you are admitted, you are forcibly to do the work in a different way and intended other users. And in the report, if you, unless otherwise you could not able to restrict yourself, made it very clear, and you have to inform your client, I'm in my report, I'm going to put that who are the going to be intended users. I made it in very clearly so that our scope of responsibility, to the extent, some extent, we can able to reduce it, and we can't keep it this particular food of our report cannot be used for the everyone. If it is the diabetic, it is restricted only for diabetic food, and only this set of people who are given the particular report, particular assumption only I prepared, and you can restrict your report, and the user of the report can be restricted. Assets being valued, very, very important, friends. Especially few days back, I have a personal experience. One of my friend of a land and building called me, very senior person, more than 35 years plus, he's doing the in the profession. He accepted the one IBC related valuation one. Initially, IP also poor man. He knows that only when his handing over was taken place, resolution profession informed the valuer. There are three assets, three locations where land is there. You have to do the valuation, and based on this work and based on his number of hours, he given the quote for 75,000 rupees. Of late, he having a doubt that the particular company, he's not given the balance sheet. He's given the balance sheet, but schedule of the particular land and building, invariably, most of the cases we might be foreseen. He given the only consolidate number. He thought that with these three assets, consolidate number will be taken into. And he called me and he asked me the help of, sir, kindly give me in the MCA website, get me the MCA website, get me the charge on the assets, and so that at least what is available in the information, let me find out, sir. Then I created the chart sheet and download the from MCA and given to that good friend. Then I understood from that there are 18 assets, 18 lands across the South India. There are the different type of assets are locating. In this pandemic situation, he was feared. Values are scattered in a different way, and when he approached the RP, then RP tells her, I don't know, even I don't know, sir. Now only fixed assets information, the client is not, CD is not supporting with me, company is not supporting with me, he's not given the full details. So whatever details I understood, there is only 3 locations, and even COC also aware about only 3 locations, and that is the reason we enter into this particular thing. And finally, sir, this 3, we given a quote for the presumption of 3. Luckiest point is in the appointment letter, when he is accepting, he given for assets of the company, RP given for the valuer, assets of the company, land and building, assets of the company given. But when giving his acceptance, he developed 101, he protected. In 101, he made it very clear, assets being valued 1, 2, 3, he clearly mentioned and given his consent. So when he argued that no, you already accepted and you had to undergo for entire thing for 75,000. If you want COC, I will accept with the COC that additional your 2 and 4 I'll engage for your convince. Then this particular valuer come out and saying that, sir, my acceptance letter, scope of work under 101 which I given to you, my acceptance, it's only for the 3 values for this value. If you want to do the assignment for the entire thing, I'm most welcome, I'll do it. But my commercials are not the same. I'll give my commercials according to the all 18 locations, and accordingly, unless you feel comfortable, you can give me a revised commercials acceptance letter, or else I will drop from that. I don't want to take this assignment, which is not viable for me. It will take us some decent time, decent cost, and different things, risks and rewards on that. Then based on this 101, that particular RP represented before COC, yes, he also accepted only 3, we only 3. So we had to revise his fee. His fees was subsequently revised according to the market, and 101 is protected. That is the reason I said, whenever you are doing land and building, plant and machinery, or any other particular assignments, and make yourself which asset you are going to do the evaluation, and in your acceptance engagement letter, make it very clearly so that it will be protect you from in future litigations, future things, and future things, even valuation things. Valuation currency, invariably in India, it's Indian rupee. Whenever you're doing a international related cross-border transactions related concerns, you want to making sure that nothing wrong in making mention very clearly, we are reporting in Indian currency. Purpose of valuation, under which section we are doing valuation, what purpose, internal purpose, or IBC purpose, or Companies Act purpose, made it very clear. And basis basis of valuation. Basis, you know that there are in the IBS, when the report comes, I'll discuss a little bit more on that. And valuation date, nature and extent of value of work, and limitation, nature and source of information, significant assumptions, type of report being prepared, type of report being prepared. Friends, this is very, very important. Even your output of your report itself, what you are going to deliver, if you could able to visualize, the output of your report, kindly make it up. This is the format, this is the information I'm going to give it. And tomorrow he should not come out and ask your client that, no, I don't want this format. My bankers are asking different formats. So you prepare in this one different format of this report. So entire exercise will be go off, whatever you take in the urine or whatever numbers you taken for the particular thing, entirely it will be disturbed. And the report, to make time waste or make misunderstanding between the client and valuer, your report, what are the contents you are going to make it up, what is the format you are going to make it up, make it very clear what type of report you are going to make it up, make it very clear. And restriction on user report, I told you who is the users of this report and readers of this report, stakeholders for this report, made it very clear. Valuation will be prepared in compliance with the IVS and value will be assessed. Friends, in other words, if you want to have wonderful output of the valuation report, you should have to spend a decent time in preparing the at least one time exercise of preparing the scope of the report. There are different, I can show you one significant report format. Yeah. So this is a sample engagement format, which consists of business valuation analysis, introduction, scope of the work, and which methodology you want to adopt. All these things, if you could able to gather, and you could have duration of the assignment. Duration. Apart from this is very important. It is very important IBC related works. End of the day, in IBC related works, the data transmission will be very poor, and when transmission of data and providing support from the RP or corporate data is very poor, and they will not provide the what is the list of assets, and they will not provide the documentation for the asset. If you go for a physical site, they will not support you for show the particular asset. And in the case of plant and machinery, assets will not be shown for your assessment, bills will not be provided, and to the valuation related. So all this difficulty you are having it, despite that half nugget, half information, if you put out of the information you provided, that to avoid that, you have to give a clear duration of how many days you required to complete the particular assignment. If you could able to capture, keeping your past experience, that will be more important, and you'll be protected from your end. Confidentiality, and most of the IPC related works, and RP will take from you a letter or confidentiality of the information. You should not be share this information. Even IBC related valuation reports is very confidential report. You are not supposed to share with your friends. You are not supposed to share with your anybody. You have to share only, provide the information only, you submit to the report only to your RP, as it is specified in the IBC law. So don't try and help others and make yourself trouble. IBC related reports, kindly, for heaven's sake, don't share to anyone except RP in a confidential way, in a soft copy or hard copy. You can share to your RP, except RP. None of the people you are supposed to share to this thing. Of course, legislators or adjudicating authority, as required, you have to provide before the court of law your evidence and all documentations and report also. And fee, ensure that even the code of conduct is made it very clear. Your report has to be, your fee has to be, you should not take any money other than what you decided. That means the fee which you are collecting in future is going to be linked audit of when due diligence comes. You are supposed to share your bank statement also, the peer review one point of stage, where you are not supposed to have any revenue other than what you decided, what you are accepted. So that way also your code of conduct will be complied. And termination, if you want in between having any problem, dispute what I described, and what is the termination proceeding, liability, limitation of the liability, and accepted terms and conditions. This is the one normal sample format which I'll which generally we'll follow in our office, which you can add all this. Apart from this, you can add a few more set of things also for valuation related issues, and to protect the compliance, the provisions of 101. Okay, after share this, let us see what exactly 103 talking about, which is our today's topic, which 103 also talking about the purpose of valuation of complex assets being valued. User requirement will determine detailed appropriate valuation report. Format of, repeat, format of the report should be agreed with the parties as a part of establishing the scope of it. Sir, 101 and 103 is friends, co-brothers and good friends, Don Jiggers, because everything, whatever you decided in the 101, you have to deliver it 103. Whatever you want to deliver 103, that understanding of what you are going to deliver in 103, you have to tell in the 101. So that is the reason I taken time on understanding the requirement of 101. If your 101 scope of the work, if you could able to properly described, properly made it and understood by the both by the your client as well as the valuer, then significant of the issues will be taken out. Compliance with the valuation standards, and if it is any legislation particularly required, any particular formatting, there is a deviation from the valuation standard, you have to go as per as the particular legislation, and you can provide the report. So this is what exactly they talking about minimum contents in the valuation report. Even 103 also not talking about any specified format for the reporting, but there is a minimum content must convey the following minimum contents. So these are the minimum contents which we will be going to discuss in detail down the line few minutes. So all these 103, whatever we mentioning it, are taken into consideration and keeping into mind. So that's what I told this valuation under present valuation rule number 8 subsection 3. These 12 content are there. Friends, keeping that in mind, of late, so when valuers are start issuing reports, especially when your report having at 8 pages, 6 pages or 4 pages, come 4 pages, we are talking about caveats, limitation, disclaimer. So significant of the thing, what we are talking about, all these things, that thing, and only one line you are talking about valuation. This is the value I arrived, and I will not responsible for this. I'm not responsible for that. I'm not this thing. And significantly, it is the dilute the purpose for which they appointed. So end of the day, if a person wants some food, and after preparing that food, if you're giving a disclaimer saying that, so this food I prepared, but I'll disclaim and I'll saying that I taken a significant care in preparation of food, but in the ingredients of the particular food, I taken from purchased from the market, that dal, rice, or any other items which are using the particular food, I'm not responsible. I'm not responsible for the quality of the rice. I'm not responsible for the quality of the dal. I'm not responsible for the quality of that oil. And what are the ingredients made? I'm not responsible because I'm not manufactured that. I brought that. I'm not. But when you are using for the purpose of for your client, for taking a human consumption food, you are supposed to have the fear, or you should have the minimum responsibility that good quality of the food which required by the client has to be provided, and whenever with a proper due care, I say with a proper due care, we are supposed to identify the material, we are supposed to identify the ingredients and prepare the food and give it to the food. And you had to tell that, okay, after finishing the food, anything wrong, I'm also so to the extent of I can take responsibility. More than that, anything in between happen, I'm not responsible. That can be done. The taste is not good up to the expectation, I'm not good. But safety point of view, you can't make it yourself disclaimer. Taste, I could not able to provide up to your expectation. Okay, that is left to you whether to take food or not in the terms of taste. But in the terms of security, in the terms of requirement, whether you can use the food for the human being or not, also if you tell, then you are diluting the purpose of the preparation of your order given by your client. The same way, when you're preparing, when a particular assignment came for as evaluation related works, once we dilute our responsibility by putting a caveats, limitation, disclaimer, and make that particular purpose, the whole purpose of appointing particular thing, and user could not able to understand what you are trying to say, and dilute by diluting and putting your caveat, limitation, disclaimers, and making ourselves more thing, and which is not fit for the purpose. That is the reason our adjudicating authority come out with wonderful guidelines in the first time, in the 1st September 2020, guidelines on caveats, limitation, and disclaimer by registered valuers in the valuation reports. This is very, very important. When these particular guidelines were issued by IBBI, it is overriding and having whenever latest things are coming in, we have to follow. That means presently in our valuation report, there are 12 contents. Apart from the 12 contents, there are some guidelines that are issued, not only caveat, limitation, disclaimer, and in the particular guidelines, IBBI come out with some other set of suggestions and how to do the valuation. What is the procedure to be followed for the before issuing the valuation report? While drafting your valuation report, apart from the 12 valuation points, what are the additional points also mandatorily required to be mentioned, and whether how to take it up, that also taken into consideration. Apart from that, they are given an illustrative list of disclaimers and caveat disclaimers, CLD, caveat limitation disclaimers, and more than that, what we should not use in the valuation report. That also is a. So today's content I will take a little bit more time, even though you might have heard this, but let us have a revision of this. This is very important. So from 1st October 2020, I repeat, friends, this is not for the SFA. This is for the all three class of assets. From 1st October 2020, all valuation reports should have follow this particular guidelines. Okay. This particular guideline talking about valuation. First, they're talking about what is the purpose of the valuation report. They recognize that what different type of legislation like income tax, wealth tax, FEMA, Companies Act, SEBI, and Prohibited, disputes, borrow, IBC, internal purpose of the companies, and all reasons they mentioned very clearly, and which we already discussed. These 12 points are very important. How they come out with compulsory be covered in the valuation report. So they come out with a set of information which required to be mentioned in all our valuation reports. Let us see. Background of the information of asset being value, being a security financial asset. Let me take the language a little bit, 1 or 2 sentences in each point. What are the things? So you need not, for fresh valuers who are not even completed or fresh valuers who are issued 1 or 2 reports, you need not require to ask any of your senior, give me a format of your valuation report. My dear friends, this is the thing. This is the 15 points, 12 plus 7, 12 plus 5, 17 points. If you could able to jot out in a serial way, and if you could able to give your language properly, then you will get a wonderful, excellent, legally compliant and very beautiful valuation report you can arrive. Trust me. So let us understand background of information asset being value. Valuation of a particular asset like land and building of so-and-so company having 3 values, 4 liabilities, different location as per the annexure attached being going to be value. Purpose of valuation, if it is the Companies Act as per the Companies Act section 62 subsection 1, or Companies Act valuation shares and debenture valuation rules, or IPC related sections under regulation so-and-so 27 and 35. So we have to tell, and or if your valuation on the income tax sector, shares valuation other than unequity shares, and whatever reason you want to mention. If for the bank purpose, you have to mention for which bank and what purpose of the valuation, for appraisal of the particular asset valuation purpose. So the purpose of the valuation is very, very important to be mentioned in your valuation report. And appointing authority. When starting my session in 247, that is the reason intentionally I was taken 247 to understand who is the appointing authority. Unless otherwise section 247, if you're not able to understand, the appointing authority will be blank. So you should be understand who is the appointing authority for the valuation related works for the Companies Act. In the case of Companies Act, we understood if a company having a audit committee is the appointing authority. Other than if a company not required audit committee, board of directors of the appointing authority. In the case of insolvency, so IBC code, RP is the responsible person, both in PPIRP as well as CARP and liquidation also. So concerned person, in case of liquidation, liquidator, RP going to be liquidator. So RP, not the board of directors or audit committee. In the case of IBC related cases, it is appointed by the by the concerned resolution profession. So you have to make it very clear, the appointing authority, if it possible, if you got the board resolution date and that board resolution date mentioning also, you can make it very clear in the report. And basis of the valuation. Friends, the basis of the valuation is very, very important. So which you could not able to find out in your 12 clauses earlier mentioned in your valuation related works. Basis made it very clear. If you go to your basis of valuation under your IVS 104, the basis will be bifurcated to IVS basis, originally market value, market rent, equitable value, investment value, synergy value, liquidation value. And apart from that, other basis of value, fair market value for other states, fair value. So valuer are responsible for understanding the regulation, cases, and other interpretation guidelines related to basis of the value is. Friends, is very important. The basis of value we have to be mentioned in your valuation reports. In the case of particular, that's what they're trying to say. Different legislations require the service of the valuer. In the case of Companies Act, in different legislation require the fair value, fair market value. And in the case of Income Tax Act, they're talking about fair market value to be valued in a prescribed format called 11 UA for shares, 11 UAE for slum sales. And in the case of IBC related works, it says that fair value and liquidation value, and in the case of surveyor, you have to give appraisal value. That is to give to the court of what exactly the appraisal value had to be on. So IRDA surveyor has to give. So depend upon the requirement that we have to understand in the appointment itself what exactly required by the particular client, particular assignment of valuation require the valuation related works. So basis of value should be mentioned in your valuation report. And premises of the value, same 104. If you see, there are 4 premises. 1, highest and best use, current use, existing use, ordinary liquidation, and forced sales. So these are the 4 things generally we'll have in there. We have to make it very clear. In the case of IBC related works, we have to be having, you have to visit the peculiar situation. IBC is a peculiar situation. What you require, the basis for, you have to give 2 values. 1, fair value, liquidation value. This is a mandatory in the CARP process, or even PPIRP, you have to give fair value and liquidation value. Fair value, there will be 2 instances in any company. One company is existing, or in company can be stopped or a stop stage. When the particular case for IBC was admitted, company may be in the functioning or company may not be functioning. But in the case of fair value, the basis of value will be, or fair value will be calculated with the premises that going concern. Even company is post condition, but we have to visualize in such a way that if it is a going concern, what is the fair value? You have to arrive on the premises of base going concern. You have to arrive the base value of fair value. On the other hand, in the case of company not in a in going concern nature, we have to visualize in such a way. Estimation has to be provided for. Estimation has to be provided with the assumption of liquidation, and you have to provide the liquidation value. So any of the stage, any of the position of the company, valuer has to make as per the requirement of the law. Either it's a going concern, fair value has to be calculated with the basis of with the premises of liquidation. You have to provide the liquidation value. So these 2 points is mandatory, should be mentioned in your valuation reports, IBC related reports, especially what we discussed so far. This basis and premises, most of the people are not writing in the reports. Kindly, I request, making sure that your reports has to be mentioned these 2 points also. Those people are who are already following, fair enough, very good. Identity of the valuer. I, Hemantha Kumar, valuer under security financial asset, registered under by so and so number and with IBBI. And other experts involved in the valuation. Friends, this is very, very important. And of late, we understood that our good friends are not giving opportunity for, let us say, when I'm doing valuation for SFA, security financial asset, it is a mandatory that I should be in a position to comment. I had to approach, I had to test check all 3 approaches. All 3 categories will have 3 approaches: income approach, and cost approach, and market approach. If I'm going for income approach, so some people having a feeling that we should not take, whenever land and building, plant and machinery is there in the company, there is no requirement to, we are supporting the client indirectly, saying that not required to take the land and building value. Friends, if you're not taking the and varying the value, correct value, fair value of particular under cost approach, how we can conclude that, justify that in your report without having cost approach and going for the income approach? So it's absolutely number one. Number two, it's absolutely it's the responsibility of the co-valuers to give the opportunity to the other valuers of land and building and plant and machinery. Let them work out. You are not supposed to do the valuation of other people work. So let them do the valuation related works and let them do arrive some particular values and use the work of the expert, or even your work also you have to use whenever required to use a work of particular area where you are not having derivatives calculation, you are not comfortable, you can use the work of expert and arrive the values of that particular derivatives, and you can use in your report particular thing. So you have to mention very clearly who are the other valuers are involved in your valuation related works. A, land and building, these are the people with the IBBA number, and even few reports I send with their photo also. Upright to see, even land and building, plant and machinery, their photos also few people are mentioned in the reports. And it should be very important to, are any other experts involved this? If no experts involved, you have to mention very clearly in single language, none other than my team members who are involved in completing the assignments. Next, intended users of the valuation. So you have to know about very clearly who are the users of this particular valuation related work. You have to mention in your report the intended users of A, B, C, D, if possible thing, and you have to make yourself cannot be restricted such a way that, but you have to make ensure that this is the only thing. This purpose, for this purpose only I prepared, only these people are to be used it. If you are not using any other purpose, then they have to valuation for the some other purpose. And disclosure of RV interest, very good. This is very important. Even the code of conduct made it very clear. Even 247 made it clear. If you have a special interest in the company, what is related party as per the Companies Act clearly defined. And if you have any interest with the independence and true and fair view of value will not arrive. That is the reason we have to disclose. I myself, as well as along with my staff who involved in the particular assignment, none of the people having interest in the company where we have done a valuation of the particular, and earlier also we not done any other capacity, done the evaluation of any other capacity we provide having an interest in the company, we have to make it very clearly. And date of appointment, valuation date, date of report. This is very, very, very important. Actually, we have to have the first understanding between these three very clearly. So anyone want to comment? Let me take one or two opinion from the people in the chat box. What is the difference between valuation date and date of report and appointment date? Is valuation date and inspection dates are both are same? Is the valuation date and inspection date are both are same or different? And it can be the same. I request in the chat box members who are active can participate. Anyone want to participate? What is the difference between valuation date? Srinivasan City, both should be the same. Okay, same. So valuation date, inspection date, both are same. Kamlesh Kumar Gupta ji, it can be the same and can be different. Okay. So very, very neutral statement. Any other statement? One is a few people said both are the same. Appointment dated appointment and appointing authority, and valuation date and inspection date. Inspection date and valuation date both are same or different? Different. Very good. So what is the difference? What is the difference? Inspection date is the date of inspection of the asset being valued, and inspection date, valuation dates are same. Very good. Inspection date and valuation dates are same. Few members are giving the answer. And any other answer? Another two answers I'll take, then I'll start. And appointment date and okay, appointment date is very simple, but inspection date, valuation dates are both the same. After inspection of verification required. Okay. Friends, okay, fine, thank you. Let me take it to. Friends, there will be requirement of 4 dates required to be mentioned in your valuation reports. I made it very clear in my reports also. 1, appointment date. Appointment date we understood, it's either by the board of directors or by audit committee. On which date they appointed, the date has to be mentioned. 2, valuation date. Valuation date is the date on which particular asset or liability or for valuation which required by the client. The date which required, it may be on any day which even before appointment day or after appointment date. The date on which exactly, like balance sheet date. On 31st March, I want to valuation. Like in Income Tax Act, for your understanding, easy understand, 1/4/2001, I want a fair market value. Or particular day of capital gains of transaction, I want the fair market value. So on transaction date or the date on which particular asset, or IBC, in the case of IBC, the valuation date will be the date on which particular IBC was started. CARP commencement date, corporate insolvency resolution process commencement date. PPARP order commencement date. So this date cannot be changed in the IBC. There may be a few confusion in the team that the date of appointment, date of valuation date can be date of how I can take maybe down the line 1 month, 2 months they are appointing me. So I'm calculating the date on my inspection, whatever date fair market value comes, that value I give. Sorry friends, even if you're appointed after 1 month, even if you're doing a valuation inspection after 2 months due to different reasons, but your valuation date should be arrived on the day of CARP. You have to be insured in the IBC related cases. Make ensure that the valuation date for your IBC related cases is the date on CARP commencement. In the case of companies or any other personal individual, that this should be decided by the client. On which date he wants the requirement based on the legislations, based on this thing, when he want any foreign country, FEMA Regulation Act. So particular date, on date, after that only, after valuation date only, transaction should be happen. Not before the transaction. Once a transaction happened, then valuation report of time, no. So different registrations require different valuation dates. The transaction required by the particular legislation or particular circumstances, particular day. In the case of banking related transaction, appraisal, bank will tell you on which date you have to take the whether inspection date, and normal parlance inspection date, we will take the value and we arrive the value. No. So we have to make it very clear with the bank assignments also. Make ensure that with the bank on what date you have to take the valuation date, and make ensure in your appointment letter that is the date for value. That like balance sheet date, balance sheet like valuation date, and inspection date, the date which you are physically verified the unit for the land and building, plant and machinery, or any other purpose, register office. So records verification, the date which you are seeing the site, that is called inspection date. Appointment date, valuation date, and probably even valuation date before appointment date also they can mention, and it can be either ways. Appointment date, valuation date can be either ways, and appointment date, valuation date, and it should be inspection date. After inspection, post inspection only, the date of report will be issued. So date of report cannot be the date on appointment date, before the appointment date, or valuation date. So this is the sequence. So in your valuation reports, I repeat, make ensure, don't do mistake. Any mistake is permissible, but doing mistake on valuation date, I seem sorry to say, I seen some few reports, valuation date and inspection date wrongly interpreted, and the same day is mentioned. If you are interpreted valuation date and inspection date same day, if this is IBC related cases, it is wrong. It's calculation entirely wrong, because you are supposed to do the valuation on reverse calculation and arrive the values by doing your international valuation standards mechanism, whatever way you have to calculate as per the law required. The valuation should be done. The valuation date in the IBC related cases is the CARP date. Whereas if you keep your valuation date on inspection date, tomorrow goes to the court of law, it is very serious. So I request, so that is the reason I showed you the 14 legislations. Friends, this is a high time for us to learn, update, upgrade, learn, unlearn. You forget whatever learned earlier, unlearn, update, upgrade. I repeat, learn, unlearn, relearn, relearn. Again, there's no age for the learning. Relearn, unlearn, relearn, update, upgrade. So upgrade ourselves and update our version 2.0 or 3.0, 4.0, update our version of valuation. Now we are in 2.0 version going to come. 1.0 version with IBBI is going to go, and 2.0 version of NIV going to come. This is very high remunerative scope of professional work is there. At the same time, the penalty is also very high. So you can't take a chance. Ignorance of law is no excuse. So make yourself very clear on before venturing any particular legislations. Understand the basic things about the legislation and at least about related to valuation related work for our discharging our work. What are the signaturing of our work? Making sure that what are the provisions on that. Now we understood date of appointment is the date on which appointed, and valuation date is the date on which requirement of the valuation. In the case of IBC, CRP date, if there is no option for the RP or valuer or COC for anyone, it is required by the legislation. CARP date is the date for the valuation date and not inspection date. Kindly rectify the point. And inspection date is the date on which you are physically verify the movable property or immovable property or properties or office, and date of report after completing or gathering the information, giving in start of report is called in reporting date. Okay. Inspection, investigation, undertaking. Of course, next point, these 2 points put together. And what are the date you have? You have to be mentioned in your thing. You have physically verified. We have to verify the dates. Business interest, ownership characteristics. Friends, not only this is applicable for the SFA, it is applicable for the land and building and plant and machinery also. At least what are the 2-3 lines you mention in your reports very clearly about what are the business interests of the particular company, how the business structuring of the index of prefix about the index about the business interest of the company, kindly, and ownership, who are the owners, what is the major stakeholding, how the company things are there. You have to be kept in your report. Nature and source of information. You have to make it very clear from which source you obtain the information to doing your valuation related works. In the case of SFA, you can even all cases, MCA website, discussion with the management, and panchayat, corporation, municipality, or any other websites, or rent control websites, or any other market particular information. If you are doing valuation for a listed company, particular BSE Sensex, and if you're doing beta or any other thing, you are doing evaluation compared to numbers, and how your basis you're taking a source of information, you have to made it very clearly. Significant assumptions, this is very, very important. Earlier also we used to do, but now it's become mandatory to include in your reports. Significant assumptions which are required to be mentioned in this. What are the assumptions, special assumptions which require doing evaluation thing? We have to make it very clear. Procedures adopted in carrying out the valuation. So what are the steps you followed and arrived the valuation related work, and valuation standards followed? We have to make it very clear what are the valuation standards followed, which valuation standard followed. We have to that is the reason it is very important I started with valuation. So valuation standards, which IVS, or which standard you followed, you have to made it very clear. Restriction on use is the report. What are the difficulties on using report? You have to be clearly mentioned. Major factors that will be taken into during the valuation and conclusion. Friends, I can see the report of a few things. All big stories will be there. End of the day, sorry to say, what is the conclusion? What is the summary of the particular report will not be there. So summary gives of the total value, concluding with the value, conclusions of a particular your research of your estimation of values should be mentioned in your valuation report. And last but not least, caveat, limitation, disclaimer. Earlier it is there. You see the comparison between earlier and now. Earlier they said that caveats, limitation, and disclaimer, to the extent they explain or exclude the limitation of faced by valuer, which shall not be for the purpose of getting is responsible. Now all this language removed. All this language removed. Caveat, limitation, disclaimer. Friends, there is a wonderful literature. I told you, guidelines on caveat, limitation, disclosure is very, very important, which is now available for you all of us. And kindly go through 1 or 2, 3, 4 times until you make yourself very clear. This is absolutely necessary to understand and make yourself comfortable. These are these things are required to be reported in your valuation report. These are the things are very, very important, and we have to report in the valuation report. Sir, but now I have one question. Since you people are not asking question, I have a question. Now we decided that, I repeat, we understood that there is a mandatory clauses, that is 13 clauses under Companies Act, 7 plus 1, 8 clauses in the IBC code, 4 clauses under SEBI is a mandatory by legislation, recognized by the registered valuer. Whether this is 12 plus 5, 12 plus 5, this 17 mandatory clauses, is it required to be used only for these mandatory things or for bank purpose or any other purpose or any other report which I am issuing to the private purpose, private use purpose, which I am issuing as a registered valuer, whether I have to follow all these 17 or whatever you want to follow, you can follow. Question is clear? Whether this 17 only applicable for the mandatory clauses or for everything, whenever in the capacity as a valuer issue. So what is the answer? Any answers? I repeat, whether this 17 clause applicable for the only mandatory related sections or any report issued by the valuer. What is your guess? Friends, I request to participate. You want the question again? Whether this is only for restricted clauses. Very good. Nataraja Kundra. Yes, to the extent applicable. Yes, only for mandatory things. Kamlesh Kumar Gupta ji. Very good. Next. Any member? These 17 clauses only for the mandatory clauses or whatever report issued by even for private purpose, bank purpose, whatever purpose you received, whether you have to follow all this 17 for all reports, few cases, Seshgir Rao. So any other answer? Last two answers I will take. Last two answers for all reports. Okay. Any other answer? Okay, fair enough. A detailed and fully reasoned valuation report should be prepared in every case of valuation done in respect of both mandatory and discriminatory valuation. Where a valuer is appointed, the following aspects need to be considered during preparation valuation. Friends, in the guidelines notes, as a valuer, it is a responsibility every registered valuer wearing and using the designation as a valuer, we had to follow guidelines note, no other option, mandatory. So this particular point also mandatory. That means if you are discharging your duty as a registered valuer letterhead or in your stamp, if you are using as a registered valuer, no doubt that particular report should follow all these 17 clauses mandatorily, should be ensured. Even bank format, if your particular few clauses are not there, put an annexure. My suggestion, put an annexure, and to avoid from all type of litigations and from the adjudicating authority or from your RVO or from the peer review person who is a professional who is going to revise the report and who was reviewing your report, nothing wrong. The idea behind this particular all 17 points, because as we discussed in the starting, that the valuation of our 25 members in our allied crowd, 25 members giving different number of different styles of valuation reports. Maybe content same, but different styles, different contents, different mechanism of report. There is a requirement that standardization of the report, standardization of the profession of the valuers is required. That is the intention when you are having a coming under one roof, when you are coming from one adjudicating authority, when you are having a constitutional and authority related one set of thing branch, then it should be, that is the reason the valuation standards are taken. Because what is valuation standard? The common set of things should be followed by a profession whenever you are discharging your profession related work. That is the reason the intention behind the law is these are the minimum contents. They are not given the format, but they're given the minimum content. It should be followed in your all valuation report so that the quality of the report will be go up. Indian valuation report will be go up, and the users of the particular report will have a able to easily understand. Keeping that aside, And after understanding that mandatory things of 17 clauses, apart from that, they given few more set of things. Affirmative statement that information provided, are we supposed to provide in his report? Should. I'm not saying may. May means it's an option, but it should be mentioned. Affirmative statement that information provided, assumptions used by the management, others developing the projections have been appropriately reviewed. So whatever information projection given by the client, you can't blindly take and based on the information provided by the client. I concluded that valuation is correct. You can't use that. I reviewed that. You may be accepted as such, or you may be with correction. You can take it up. After that, you can get a corrections, and after taking signature from them. But you should say that I verified, I was satisfied with the information provided by the client regarding the basis of assumption, contents of business being valued, and industry and economy. An affirmative statement of adequacy of information, time for carrying of valuation. Friends, make ensure that you have to give an affirmation to in your evaluation report that I have a appropriate time. I have a sufficient time to complete my assignment. Tomorrow in the court of law, you can't say, once you give affirmation, that you can't say that I don't have sufficient time within the time which given by the client, within a span of 2 days, 1 day. I could have, who asked you to do it? If you are not comfortable for your complete conclusion for full satisfaction, you are not concluding the valuation report. So now it is a responsibility for the valuer to give one more statement, affirmative statement, adequacy of the information, and carry out your valuation. You have to satisfy and inform in your valuation report that I have a sufficient time to undergo it with a free mind and free sight without having any compulsion or any other disturbance. And we should mention any key factor which may be material impact on the valuation. Friends, apart from your particular area, any other area which you feel that significant thing you want to mention in your report, you can mention. In one report, I mentioned particular stock was kept in the harbor, configured by the customs authority, and that particular value is diluted, and nothing is the liability is duty value is more than the stock value which are laying in the books, and the book value are taken 0, so there is nothing wrong, and there is a statement given and certificate given by the duty authority. Even if it sell also, it is already scrapped. Nothing value, 0 value is there. And if at all any scrap value we sell also, that is more than it is the custody of the customs department, which is more than the value liability. So those situations value keeping that I given, then there is no inventory. The purpose of the inventory control mechanism, bookkeeping mechanism is not, system is not there. I commented in the evaluation report, there is a serious requirement of inventory control mechanism to be developed in the company. I'm giving a valuation for one company. So I mentioned, so those points, significant points which improves the system, improves that attention of the valuer, users of your stakeholders of the particular valuation report. You have very much important when you see the particular land. If the particular land is required to be do some particular immediate in a demolish stage, it's immediately required to be bringing to the attention of the user that if you're not taking care of the particular maintenance of particular building, it can be collapsed within a span of 1 or 2 months. If it is a serious concern is if value are observed, why not? Definitely the situation of the particular thing we have to be taken to consideration. In the case of valuation of tangibles, that's what I'm trying to say. There may be impact on the valuation due to factuality, structural design, or content mention based on the individual circumstances. How to such information be evaluated. So all these structural difficulty or structural things may be, even if you feel that to comment on that, you have supposed to be mentioned in your valuation report. And apart from that, in the valuation report, you have to be required to be, there is a, maybe they're not mentioned about, you may be required to mention in your report, but there's a mandatory that valuer, how you done the valuation related works, like what are the steps you followed and what are the documentation process you followed, what are the things you kept in your working file, you should be kept in, all these things are to be taken in a very detailed way. Before preparation of the valuation report, what are the steps you taken and what are the in other words, what are the document related issues you kept in your working files is very important. This is the working files only can able to help you tomorrow any dispute or any misunderstanding between the client and this, and which required for any cross verification by the peer review. Review of the past financial statements, review and analysis of financial projections and industry analysis, SWOT analysis, compare with other transactions. So compare with a similar listed company. All these things we might be studied as a theoretical subject for business valuation of equity in the SFA. But all these theoretical concepts, which should be nowadays put in practical, and all these practical things, working papers you have to keep in your working paper file before you are concluding it, before you are making the things concluded as a valuation approaches, before concluding your valuation approaches, and before you concluding your valuation method and arrive the values. All these working papers are mandatory. Discuss with the management, review of principal agreement, site visit, assumptions. So all these are working papers are required to kept up to your working capital file for before starting your valuation related works. And we discussed so far what to do. Now, very, very important, what we should not do. They made it what are 6 points. 6 points we should not mention in your valuation report. That is also very important. Business plans, forecast, receipt from the client. Are we giving a disclaimer? Disclaimer simple. For business plans, forecast, receipt from the client without applying test of reasonability and due care. Whatever value given by the land and building, blindly taken by the client and blindly taken by, you can't take it value. And whatever projection given by the client for the future revenue of rentals, blindly taken to us and arrive the values. And whatever projection for the income, DCF calculation, and what are the cash flows given by the client, blindly taking and without applying our reasonability and due diligence, and without our application of thing, whether it's correct or not, it cannot be mentioned in our report. Physical verification. First time they introduced desktop valuation. Introduce the language called desktop valuation, especially in the case of pandemic situation like this, wherever you could not able to physically go, wherever tangible assets are required to be engaged. Are we giving a disclaimer that he is not physically verified? Tangible in the case of engagement providing liquidation, especially in the case of liquidation value, is absolutely 99.9%. Making sure that you require to be to avoid argument in this particular point. Make yourself just justify for a desktop valuation. Kindly do a physical verification and arrive the values. Then only physically you could be able to understand what exactly it is. In circumstances where you physically could not able to make it up, and still you want to give the liquidation value for a particular thing, and you have to make yourself justifiable that the disclaimer that you're doing by a desktop valuation and with a proper justification. Then only it can be taken. But blindly, don't give in your report. I could not able to go physically for giving the liquidation value. Market related data. Are we giving a disclaimer for market data employed in his report? Beta, discount factor, comparable numbers, transaction value without appropriateness. So kindly, whatever you received, whatever you want to use assumption, absolutely have a freedom to use it, subject to your proper due diligence, proper application, whether the particular numbers are correct, and source, whatever given by the particular source, you should be in a position to done your own exercise and apple to apple comparison. After doing a proper discounting, you arrive the value. You should, in other words, you should be in a position to substantiate your statement. And historical analysis, are you in disclaimer that is not done any historical analysis while conducting value exercises for listed, although historical could have been arranged with a reasonable efforts. So just like that, we can't blindly say that. So I tried it, I asked it, but I asked it, they are not provided. But what efforts we taken, we should have in a position to have a documentary evidence that I taken this much efforts for getting the information. Still, I could not able to get the information and make it. That is the reason I conclude this way. And you should have a documented that. One approach. In my discussion also, I told, don't conclude your report with saying that only without discussing about other two approaches, why you could not able to. You have to give a justification. So that is the reason, give an opportunity to co-valuers, land and building, plant and machinery appropriately wherever required to be done by evaluation. You have to, only thing you have to educate the customer. You have to educate the customer. It is not your wish, or you're not making the client additional liability of the cost, but it is a mandatory. You have to tell the client very clearly, mandatorily it is required to be comply the provision. That is the reason we have to take the valuation from co-valuers and obtain the things. And that is the reason it is the mandatory. Don't mention blankly, I'm following this, I'm doing this. And you have the position to use it. Are we giving disclaimer for work done by other experts and finding some same does not form part of experts in report of RV? So wherever you are doing using the work of expert, you have to ensure that expert opinion should be mentioned in your report properly, and you are also liable for whatever expert given the thing. in your report. So to cut short, invariably to visualize our report, generally invariably your report will be structured in such a way that there will be some executive summary. Before you write, before how to prepare the valuation report is my content. For concluding this, before starting your valuation report, before that you should have a set of protocols that we followed. You should, for set of information should be done and obtained and keep everything ready. And for getting this information ready for preparation of the report, the first one is you have to do appropriately the valuation related works. The valuation work has to be done as per as the valuation standards in India presently. And before valuation standard comes, appointment and your engagement letter, making sure that compliance of 101 and get all information to be captured in 101 very clearly. If 101 is, your path is clear, if your appointment and your vision for output is clear, then your immediate step for your valuation work will be more beautiful, easy. And if your valuation work is more beautiful, easy, and collected information very professionally, very easily, then you can when you keep all information into one place, and if you start your preparation of report, your report will be come out with excellent and whatever you desired. That way of there is no requirement for the bride to again giving a last moment touch up. So everything makeup made it. And after issuing the report also, I repeat, after issuing the report also, sometimes we'll feel bad. Oh, I missed out this, I missed out that. So for that, we have to have our own internal control system. Before understanding the internal control system, tips, let me understand the overall structure of the valuation report. The summary of the valuation report, you can take it up 1 page or 1.5 page executive summary of how, when they appointed the valuers and what purpose they appoint the valuers, and what is the conclusion, what is the standards you followed, and what is the methodology, what is the approach and methodology followed, what is the conclusion, and 1 page may summary of the all big, very important, because people maybe users may not have the time to study the entire thing. For having a wonderful easy understanding or user friendly, you can for make your report more rosy and friendly, exclusive summary will look more clear and easily understandable for the users. Next, you can give the index, contents and index of pages number if you want to have it. Next, you can go for basic introduction about the company and what is the purpose, appointing authority, and what are the 17 points we discussed. All 17 points according to circumstances, like background of the company, valuation date, appointment date, and who is appointing authority, report date, and inspection date. All 4 days for confusion, to remove the confusion, you can keep one place, and basis and premises you can keep it, and valuation standard follows, and valuation approaches and methodologies you followed, and all 3 approaches can be described in a nice way, and why you follow this method, why you not follow that method. All these things you have to mention. The source of information, caveat. So in other words, all 17 points you keep it into one structural way. Friends, this report structure is not only for SFA. This is for all 3 classes of assets. I strongly recommend. I'll show you one working file. I thought it may be useful for you. Able to view this? No? Able to use this? No. Okay. Hope it's visible. Hope it is visible. Friends, I hope it's visible. Excel file? Yeah, fine, fantastic. So I develop a working file like this before issuing any particular valuation report, before starting a valuation report to sign. So I have a 3 mechanism: 1, prepared by; 2, verified by; 2, signed by, approved by. These are the 3 things. Even your office having this setup of a comfort zone of prepared by some set of people, and verified by set of people, and certified the set of people, no problem. You are the signing authority. You can take the steps in your state. But in the case of one-man company, one-man profession, so I request in different 3 situations, and the different 3 locations. First, you take the shelter as a prepared by. You prepare the information, all 17 contents, whether what is the source of information, and status, whenever the status report, and any other significant point if you want to keep for the report purpose. Well, drafting itself, this is a common for all clients. Once any particular case came, first valuation assignment came, always assignment number I'll give. After that, after particular assignment number, for example, some XYZ company, for XYZ company, this is the things started. Whether what are the information I collected, what are the things I background of the information. So all these things I'll collect, I'll keep the stored, and as well as the discussion, and I'll keep everything in the remarks column. And if it is a keeping in a working files, I'll keep the next linking file for this particular source of documentation. For example, appointment letter, I'll keep in the next working file, appointment letter, then I'll give a link file for this. So like this, different things, different basis, what basis I have it. So for the logic behind it. So every point which I'm going to cover, which I will have a source of documentation link I will have, and I will know the what is the exactly status, completed, under process, information yet to receive, and or any other remarks during the carrying out my valuation related work. If anything I want to remarks, I want to keep for the reporting purpose, I'll keep in the remark side. And apart from that, there are other few points like affirmative statements or other things which we discussed. All these points in one place I keep, and review of financial statement. And while doing your procedure followed for involving the preparation of valuation report, these are the steps I supposed to follow. All these things I'll keep it in the checklist. And report should not use what are the things, whether my report having not to do things also, and engagement related issues, any specific instructions or specific format or specific things when doing the engagement related works. So all these things I'll mention in that. So in other words, for every case, like how we have in the hospital one chart sheet for every patient, the same way for every client, we have a one sort of Excel file will be prepared, and accordingly I'll proceed further for my sort of valuation related works. I hope I'll take a few sort of practical questions so that let me take. I love to have more interactive sessions rather than one side speaking. So let me take one by one the questions. Whatever best I can able to cover, I'll cover it. Okay. Can I get a copy of the sheet? Definitely I'll share with you through the RVO. Can we have any disclaimer regarding COVID-19 in the evaluation report in the current situation? Of course, sir, in COVID-related disclaimers, we can mention in the caveat disclaimer and limitation guidelines. If you see post-valuation report, I repeat, post-valuation report, say signing, not report. Post-valuation signing date, any significant transactions happen which is not influence on the valuation and in the present value which you are doing, we are not accountable for the, you can disclaim our thing, and that can be very much suited here. Number two, whenever you are taking values of related to beta or market related information, there is a significant risk involved. So you can mention your disclaimers related to particular what is the basis and what is your justification to bringing out the particular assumption. You have to mention very clearly to protect ourselves. What is the what if physical is not at all possible should be disclaimer given? Yes, sir. That's what I told. In the case of we could not able to make it up physical verification of thing, definitely desktop. That is called desktop valuation. They introduced a new word called desktop valuation. Whenever circumstances made it desktop valuation, you have to mention in your report very clearly what, because lockdown was completed in lockdown, report has to be issued, and we understood that we done a survey of through Google or whatever way you justify by seeing that, by doing that activity, other which is substitute for your physical to arrive the liquidation value. For the liquidation value, substitute for physical is desktop valuation. So the methodology which you are using, it can be just justified and it can be mentioned in your report, and it will be protected from your end. In general, this should be followed. In specific cases, you may use the additional requirement. I don't know what is it. All report, yes, all reports, in all reports, whether the mandatory or discriminatory, even for banking related activity, this is mandatory, sir. So to avoid all type of consequences, we have to be better follow all 17 points should be taken into cases. That's what, whenever a bank given a specific format, kindly follow the format. Apart from that, if you could able to provide additional information by annexer, bank will be more happy. Bank will be more happy. At the same time, we will also be protected from ourselves to protect our skin. Okay, can valuation date by 1 year prior to the appointment date? You mean to say the appointment date today and valuation date is 1 year back? Possible. For example, I'll give example of income tax. They will capital gains calculation today. Yesterday they came to your office to do a valuation of fair market value on which date, sir? For 50C for wealth tax valuation. That is 1/4/2001. That means valuation date is for 20 years. 2001 or 2021. So valuation date can be requirement of the particular user. So it can be more than 1 year possible. For internal purpose, family settlement, I repeat, for shares family settlement, they want to have a settlement on last year balance sheet March date. 2020, March 2020 is they have decided that from that date to this date, they had negotiations are going on. But legally or formally they agreed between the partner that the rate of consideration will be fixed on 30/3/2020. That is the case. What will happen? They will appoint the valuer for settlement to arrive the value of 30/3/2020. I know you can't say that I do you do the valuation today. No, you can do the valuation based on the requirement on the case to case. Okay, valuation date is last. No, sir, valuation date is not like so. Signature date is last. First, appointment date. Either it may be valuation date can be before appointment date or after appointment in a few cases. And third one, inspection date. And finally, report date. CRP date is a common pay date. Yes, of course, valuation date in the case of IBC, there is no option. It's a mandatory that, and the law it's specified in all CIRP cases, valuation date is CIRP date. It is not the discretion of the RP or IRP or COC or any other person or valuer. It is the date of valuation date is CIRP date. Inspection date on which assets are inspected or valued as a told by client. No, you are not supposed to do. That's what, again, it's a question of your valuation date for bank purpose. If they mention that inspection date, if you want to have bank is given instruction to you, yes, I agree with you. Inspection date, a bank is required. Valuation date, it can be absolutely, there's no problem. But in the case of IBC or any specific law, inspection valuation date is different from inspection date. Valuation date cannot be inspection date. Sometimes the same day valuation date, inspection appointed date, and inspection date is the same day. If it has happened, no, I mean there is a possibility. Valuation appointment day, valuation day, inspection there itself is sit. A appointment is given. You are supposed to do the valuation here. When inspect the business, that is possible. After inspection, a lot of verification required. Of course, verification of valuation is the date of NCLT order. NCLT order is called CIRP date, sir. In the NCLT, when NCLT Honorable NCLT Court admit the case, and the date admitted date case is called CIRP date, and the date will be the valuation date. Inspection date, valuation date, inspection date, therefore inspection. Okay. Appointing date, date of appointment. Okay. By the appointing authority, appointing date and date of appointing by the authority. Yes, sir. Both are very important. Preferably appointing authority. Specifically, you mentioned who is your appointed appointee, bank, company, or what is that? Audit committee or board of directors, or who are upon the client. You made it, and these 4 days, better you keep these 4 days: appointment date, valuation date, inspection date, report date. If you write in one place, the confusion will not be there, including for the user as well as the valuer. Good afternoon, good afternoon, good afternoon, good afternoon. Address is given. Okay, good. If asset is seized and held in the customs of some authority, say SEBI or DRI, and that authority is not cooperating, then how to value outstanding disclaimer community? I think a pure technical question of your valuation related of particular land. Invariably, when it is seized, only the information you can share with them is you have to approach. If you want to have particular way of valuation to be mandatorily, law is mandatory. For example, IBC case. That's what I told. Even one IBC case, I told the particular stock was seized by the customs authority, kept at the port, and particular goods are already scrapped last 7 years. Nothing is there. It will be identified. But customs authority, we approached customs authority to about confirmation of that, but because the goods are in the custody of the particular custom authority, so we asked the custom authority to give a certificate. What is the value of that one? Whether acceptance of the asset. They said that nothing is there, already everything scrap, and there will be a scrap value, and our value is more than the scrap value, and they're given some scrap value also. They're given some scrap value, and the liability is also they're given. With the certificate, we taken that and we make our report itself based on the certificate issued, and with this thing we made it such saying that the value is 0, and whatever scrap value is liable to recover by the first lien will be for the customs people, because it's in the custody of the custom. So they will take it up. That's what we mentioned in the value as a 0, and we give a justification. Good. If you could get any information from management, how we can cross check it, cannot be disclaimed it. So we have to. This is the valuation also. Whatever information given by the client, the client will say, my value is for 100 rupees company. They'll say 10,000 rupees. But we have to have your information, and whatever market we have 3 methods. We have to do our application of our by using international valuation standards. We have to do our valuation and arrive the value. Any other questions, sir? Any specific questions? I'd like to discuss. Okay. Hope further no other questions from the audience. Hope I contributed a little bit, update you about latest updations and what could be the future valuation related works. 56.2, should we follow the prescribed by CBDT only? Yes, sir. There is a Kamlesh Kumar ji, Gupta ji. If valuation is being made for section 56 subsection 2 of IT, should we follow the way prescribed by the CBDT only? Yes, sir. 11 UA you have to follow whatever prescribed in the level U, prescribed format, valuation of fair value. You can't do your IVS, cannot be applied there. IVS cannot be applied there. You have to, IVS have a deviation. When a particular legislation having a prescribed procedure, prescribed format to be followed, we have to follow the same format, same procedure has to be followed. There is no question of deviation from the CBDT circular. We have to follow the same rules. The concerned legislation we have to follow. So thank you very much for the patient listening, and hope some sort of, definitely there is a value addition and improvisation of the bride for the next level. So before bride going, after going to the reception also, tinkling work we should not do. So before handing over to the customer, let us have perfect way of all this, keeping our whatever discuss the points we keep into mind. And thank you very much, sir. Thank you, Saran Kumar sir. Thank you, Bhaskar sir, for thank you very much for patient listening. And thanks to all, and thanks to madam.
Thank you, sir. Thank you for the informative webinar on valuation reports. I hope the questions that were put up by the participants were all answered. And I'd like to inform everyone of another webinar that we are having on 22nd of June. And the speaker for that webinar is also sir. So if you are interested in that, the links were sent out, and you have my number, you have my email ID. You can always reach out for that. The topic for that webinar is valuation of the slum sale under income tax. So if you want to join that, you can always reach out. Thank you, sir. Thank you for the webinar.
Thank you. So slum sales is the new topic. Friends, slum sale is a new topic. Last month, 24th May, Income Tax Department notified the particular notification, 11 UA. Probably ours is the first RVO. Probably I had to appreciate the initiation taken by AIOEF for first time conducting all over India about RVO, in the RVO for about slum sale. Slum sale is a very good opportunity. It is not only for the SFA, the professional opportunity open for more than SFA, land and building and plant and machinery. In a prescribed format, what is the procedure to be followed, how to do the valuation, and what is the professional opportunity, and how to take it up. All these things we can discuss and upgrade ourselves. Learn, unlearn, relearn, update, upgrade. Thank you very much. Have a nice day. Bye-bye. Stay safe.
Thank you.
Namaskar. Stay safe. Bye-bye.